to the relevant groups as well. All right, so hello everyone to another edition of This Week in Crypto, where we at Sentiment, both the team and the community, kind of talk about some of the things we've been noticing around the market and in our own metrics. So usually what we do is we're going to have a short, maybe 10-minute sort of blocks where a few of us are going to kind of showcase some of the things they've been seeing around the market and what they think it means. Yeah, we'll after the call is done, I'll share the recording to anybody interested. And if you wanna be a part of these calls going forward, DM me or let us know in other ways on Discord or Twitter. Of any feedback or what you'd like to see next, maybe some topics that you would like to have us cover in the next editions. So, with that said, let's start with the same way that we started with last week. Let's start with Jan. Jan, last week you talked about or teased the price and the AA, sort of the model that you were working on, which sort of looks at the divergence between the price action of a coin and the daily active addresses on the other hand, and there are some promising results. So we're currently finishing up that article, which will go live on Monday. But in the meantime, I think, Jan, there's some additional work that you've been doing on a different metric of ours that you might want to kind of share with the team here.
Yeah, so I did like a bit of a side article. It's really just like, it's not even, I wouldn't call it research. It's just something that kind of came to my attention because I'm a big fan of the stock to flow ratio and the stock to flow model, actually.
Do you want to share your screen?
Yeah. Mm-hmm. 1 second. And so maybe for the people who don't know, like the stock to flow ratio is kind of like an idea that is typically used for commodities like gold, for example, to basically measure how valuable it is by basically saying like the stock is every gold that is available currently, and the flow is the amount of gold that is newly mined every year. So the stock divided by the flow gets you the stock to flow ratio, which gives you kind of like an idea of like how many years it would take to double the amount of gold in this case. And people found out very, very quickly that this actually corresponds very well to Bitcoin. And with Bitcoin, it's even more interesting because like of the halvenings, because if the available Bitcoins for mining even drops, this stock to flow ratio gets better. And there is a model to it that is actually pretty good in at least in describing the current the prices made by a guy from Medium called Plan B. He basically designed this model, and the interesting thing from my side was basically that he also describes the model fits the price really, really well, but B, also if you have a look on this, actually gold, for example, fits pretty well to this prediction line as well. So kind of like the predicted value given a certain stock to flow ratio actually fits gold pretty well as well. And the interesting thing that I now found out that I'm currently writing this article about is that it seems to fit even better than even this guy Plan B thought. Because if you look, this is like the line how the value should behave in respect to the stock to flow scarcity, and it's kind of above. If you look at this, kind of like if you say the predicted value should be somewhere like around 2 trillion, while the real value here is like around 7 trillion. That's quite a bit off. But the interesting thing now is that I found out he's using these 7 trillion, which is total value of gold at all, like in general, so all the gold available. But that probably isn't the best value for this, because that would include all the gold that is in jewelry, that is used in the industry, for example. So I looked up, like I calculated the amount of gold that is probably used as an investment. and that came down to around like 1.7, 1.8 trillion, which would fit the line actually perfectly. And so, yeah, this is basically the idea, that it's kind of an interesting finding that the real true invested gold value is fitting this model even better. And it's kind of confirming this because the regular model was just trained on Bitcoin and its stock to flow ratio. And all of a sudden we have gold fitting in perfectly to this model, which I found really, really interesting. And if you know the stock to flow model, it's basically predicting around 100K Bitcoin after the next halving. So it's kind of exciting. Yeah.
So yeah,
So that,
I've read the initial analysis and from Plan B, and I know that in the meantime we also developed the stock to flow ratio for stack-based coins. So we have in Grafana stock to flow ratio not just for Bitcoin but also for Ethereum and a variety of ERC20 coins as well. So is there so the image that you're showing us right now, this is what Plan B was kind of looking at, right? Do you have a sort of a rectified version, or the one where you are looking into? Yeah.
So basically this is the real price prediction basically here. Like, this is on, I guess, like two different scales basically. Now he's plotting the value against the stock to flow ratio, and he's plotting the predicted value according to stock to flow ratio over time basically. And this is as can be seen, like here we kind of like mid 2020 we're expecting the next halvening, and this might be very interesting of course in terms of price.
Yeah, because the model predicts around just below 100K for Bitcoin after the halving, right?
Yeah.
Yeah. Did you happen to do, because I haven't seen, no, this might just be me, but I haven't seen much talk about the stock to flow ratio for Ethereum and its predictive powers. Have we tried looking into S2F for Ethereum and maybe how well it fits with its current price action or historical price action?
Haven't checked that, to be honest.
Might be interesting to take a look and see kind of, whether there are like huge discrepancies, because the model, obviously, like historically looking at it, it seems to be quite on the money for a lot of these, especially for the first few years for Bitcoin. So yeah, it would be interesting to see whether it holds true for other altcoins as well. But cool, yes. So this is something that the analysis will be out sometimes mid next week. It's basically just like an addendum to what Plan B has already kind of done. And I can, if you want to stop sharing for a second, Jan, I can also show our own stock to flow model. So when you go to, oh, I need to share my screen. One sec. I forgot that you guys don't see it. All right, share my entire screen. Yes, so in SandGraphs, if you have a subscription to it, basically there's a stock to flow metric here, which you can kind of gander over the last, well, as many years as you want. So let's say 10 years. And then this is for Bitcoin, but
I'm still not seeing your screen.
Oh, really?
Is that only me?
It says that I'm presenting to everyone.
Showing up for me, okay.
Sorry, Brian, are you seeing my screen or not?
Yeah, it's working.
Oh, okay. Jan, might be on your side.
Okay, then it's only me.
Jan, try looking at the computer.
Okay.
Okay. That makes sense.
And so this is the stock to flow for Ethereum, and I assume that this spike here is just a data glitch rather than an actual like spike in the stock to flow. So yeah, if you guys are interested in more information about the stock to flow ratio, check it out in Grafana, or ask Jan to do any sort of back test that you're interested in. So yeah, cool. Thanks for sharing, Jan, and we'll share the analysis once it's done, sometime mid next week, with the community as well. Okay. In case you don't have anything else to share at this point, I suggest we move on to the next one. Brian, do you want to kind of jump in and share what you've been looking at this week?
Yeah, no problem. Let me go ahead and share my screen here.
Okay, I'll stop
I'll
presenting.
go ahead and disconnect yours. Yep.
Yep.
All right. Can you guys see mine okay?
Yes.
Okay, cool. So I've got one big thing to share and then a little NVT update that I can sort of touch on briefly. I know I've talked about that over the last couple of weeks, but it's always important, and I will touch on it again because I've made some pretty big updates. But to start off, there was a pretty big story that came out right around this time yesterday about some Bitcoin whales mobilizing more than 1.8 billion. I know that number went actually above 2 since the posting of this article. So it was a very large move and caught a lot of people's attention. It was posted on some of the whale alert sites and some of the big, whale Twitter accounts out there that recognize when there's a big move like that. So I got to thinking and said, well, maybe we can check out our own sand graph, see if there's some interesting spikes going on in, some of the things like average age consumed. I didn't really see anything, but then I turned to the stable coins and I said, well, what about USDC and what about Tether? And that's when I noticed some pretty alarming stuff. So we just had one huge spike. It was our biggest, I think the biggest USDC has ever had, because before this, they were very small before that calendar year turned. And I looked at some of these previous spikes. So this one was a little smaller, obviously, but we saw on the 19th, if I get it exactly right, yeah, the 19th, we had a big spike, and I went over to Sandbase to check Bitcoin and what happened. And that was right here, right when we dropped off from 10,000 down to 8,100 in the span of 5 calendar days. So then I went back and I said, well, what about the one before that? And there was kind of a double spike right here. The first one being on the 8th and the second one being the 11th, it looks like. So if I ballpark it and go over here, we can see the 8th was right when it dropped from 11.8, pretty close to its calendar high, all the way down past the 11th here, and we went down 10.3. So that's, I don't know, roughly a 15 to 20% drop. And this one was even larger. And then today, we finally broke down below 8,500 after trading in the 87 to 9,400 range for the last 3 weeks or so. So I would say this is pretty statistically significant and shows that we have some correlation between anytime there's an average age consumed spike, particularly in USDC now. It's something to look for, and I would encourage you people watching on YouTube who are considering using us to really try to weigh the magnitude of this, because it could really help with your trades and help you recognize when there might be some negative price movement coming our way, and you can set alerts for things like this. I know we're still in the process of getting everything set up with more in the weed statistics like average age consumed. But once we have it, having an alert that says there's a spike in something where the last 4 spikes all preceded a big downturn, that's something that people can really get a huge edge from by tracking this kind of stuff. So I wanted to point that out. I also checked Tether. It didn't have too much significance, but I did see on DAI, we had their biggest stack velocity spike ever at that same time that the whale alert went down. So it's something to look for. I'm I would say that the most significant is definitely the USDC side, what I just showed with the addresses, but the stag velocity too, it's something to look for. I looked at these other spikes. It wasn't quite as perfectly correlated as that last example, but there is a lot of significance when you look at things like stag velocity and other things like average age consumed with stable coins, because anytime Bitcoin is moving around in large chunks like that, there's a very good chance that trading pair going along with it is some sort of USD trading pair. If anyone wants to jump in and has a question about that or an insight, please feel free before I do the other.
Yeah,
insight I have.
can you go to Sandbase and look for so this kind of look for Tether because this sort of analysis sort of updates to what we've been, I think, covering a few weeks ago. Also, just seeming correlations between stable coins and big, major coins. So Bitcoin and Ethereum in particular. So as far as Tether is concerned, maybe you can just remove the price because it's all noise. And even remove the volume. I think I'm not sure about the spikes in token age consumed, but if you can take a look at the transaction volume for starters, there should be some correlations there between the movement of. Now, by the way, this is ERC20 Tether, but between the movement of a Tether on chain as well as the Bitcoin's kind of price action. So especially those recent spikes.
Mhm.
If you can take a look at what's been going on Bitcoin at around that time, I think there, because I've been looking at a similar thing, I think there's a pattern there also emerging, which obviously makes a lot of sense. As you know, USDT, BTC pairs are one of the more active ones on the market, and ERC20 Tether has been growing exponentially for the past few months ever since Binance introduced it and Poloniex. So it makes sense that there would be a rising correlation between ERC20 Tether on the one hand and its movements on chain and the Bitcoin price on the other hand.
Yeah, I'm checking it right now. 9/11 was the big spike on Tether. It had a little bit of volatility, but it was kind of just a continuation of a slight slope downward. October 28th.
Can you zoom it in to 3 months?
Yeah.
Mm-hmm.
So this is Bitcoin. Do you want me to look at Tether that way too?
Yeah. And so let's look at this. So there was one spike on what's that, like September 8th or something, and then there's another one on October. So that's September 11th. Yeah, and then okay, can we look what's been going on around Bitcoin? So September 11th, there wasn't much well, there's been that's actually the local top, almost the local top on September 12th.
Yeah, that's a good point.
Mm-hmm. After which it's kind of started consolidating, and then on the 28th as well, right? So both of these moves kind of correlating with the Bitcoin meeting its resistance, which is, I think there's also some sort of a token age consumed correlation there as well. But this is something that I've been also taking a look at recently, and I'm looking forward to the time where we can, on Sandbase in particular, when we can plot the on-chain metrics for stablecoins against the price action of big coins like Bitcoin and Ethereum, because I think there's a lot of merit to these claims.
Yeah, from what I'm hearing, that's coming up soon. So stay tuned, everyone, to see that one pop up. It'll be a big help in comparing any two assets at any time.
Sure. Actually, before you move on, are you okay with me hijacking your screen or presenting myself for a second? Yeah, because I wanted to show. Sorry, what?
Why don't you go ahead? I'll just stop sharing and you go ahead.
Okay. Because I wanted to show a similar sort of pattern that I've been looking at. Actually, maybe Gary Gary shared it with me yesterday, and it looks better than what I have developed. So in Figma, so I've been looking at pretty much the same thing. So on-chain activity for DAI and how it correlates to the price of Ethereum. Now, as I mentioned, currently we don't have a capability on Grafana or Sandbase to plot the price of a stable coin against a price of another coin. or to plot the on-chain activity of a stablecoin against the price of any other coin. So this I have done in Photoshop. As you can see, the colors aren't the greatest, so pardon my Photoshop skills, but essentially the green line is the price of Ethereum, and then the other color lines are whatever on-chain metric I'm looking for DAI. So I've been looking at whether there's sort of correlations between the price action of Ethereum and the on-chain activity and motions for DAI, as well as just the DEX activity or the activity on decentralized exchanges. So this is something that I've noticed, especially for token age consumed. So similar to what you've been mentioning for USDC, Brian. So there's been a spike in token age consumed almost at pretty much every bottom over the last few months for Ethereum. So there's one here, and then a huge one there, and then a few smaller ones right around every Ethereum bottom for the past, so what is this, like 4 months, right? And then there's a bunch of other metrics that I've looked at as well, including the change in the top holders for DAI. So DAI whales moving their coins, I would assume, to exchanges as well. So you can see a decline in the holdings of top DAI whales right around the time that Ethereum started to bottom out as well. And then if you look at the number or the amount of trades on decentralized exchanges in particular, so this is specifically for DAI, you can see an elevated activity on decentralized exchanges, particularly for the DAI stablecoin, again, at the time of of several bottoms for Ethereum. So the pattern does seem to repeat quite often recently. So the volume of trades on decentralized exchanges also has seemed to spike every time there's a pronounced bottom for Ethereum as well. And then probably most egregiously, the transaction volume correlates perfectly. So here there's a spike pretty much every time the price of Ethereum begins to bottom out. So yes, I'm working on an article around this as well, but just wanted to share also as an addendum to what you mentioned, Brian. There definitely seems to be some sort of correlation there, and looking forward to exploring it further and doing some back tests on this with Jan to just see how actually, how big the correlation has been over the last 6 months or so. So yeah, I'll just stop sharing now, and you can continue with your own presentation.
Yeah, thanks, Dino. That's definitely significant, and honestly, there's so much correlation with these stable coins compared to, with USDC compared to Bitcoin, and with DAI compared to Ethereum. I'd say it would be wise to really start touching on it on a weekly basis together during these meetings, because of how statistically significant it all is right now. Whether that might change in the future, who knows? But these spikes are too well correlated to find them to be a coincidence at this point, in my opinion. Okay, that being said, I'm going to present one more time and just do a quick update on NVT because I made some changes. And you guys will actually see a big breakdown of this when I release my article next week. Hopefully the metrics have resolved, so this is working again. Good. Hopefully. There's a lot of metric churning going on this template now, so it takes just a short time. There we go. So we have here a little more variation in colors. As you guys probably noticed, before it was red, yellow, green. Now we've got a 5-color array instead. It's not just to look better. These are actually significant because they measure from a scale of 1 to 5 now instead of 1 to 3, how bearish to bullish Bitcoin is, or Ethereum, which hopefully will work at this point. It wasn't working when we were down about an hour ago, but I'll check it. But basically, this bearishness and bullishness is all based on the amount of transaction volume or token circulation, which is the version of NVT I'm using and then comparing it. Whoa, it's going a little nuts there all of a sudden. You guys saw that too, right?
Yep.
Hopefully the server didn't just go down again or something.
Yeah, it could be that the devs are doing some updates on the API side, but maybe if you reload, might be coming back.
Yeah, it's doing it on its own. It might just have to
Oh,
reset.
okay.
I'll keep explaining it. Basically, what I did was I made 4 trend lines based on what appeared to be the most useful, wavelengths of days that would give meaning to the fluctuations of NVT compared to price. I did a lot of experimenting with this. It honestly was a lot of fun seeing how colors would change based on the types of trend lines that would be used. And I tried not to be biased and just set it in a way where it'd tell the best story and make NVT the most convincing. I really wanted to make it a fair, accurate depiction of what NVT is capable of doing as a leading indicator. And what I found is that there is a ton of significance when NVT stays below all 4 of those trend lines and the price going up. It goes up almost every month when that's the case, vice versa, when they're all above the trend lines. There are some cases where NVT might actually be, higher than where it was in 2017, but actually go up, whereas in 2017 it actually went down. And that's why those trend lines exist. As this visual comes back, I'll be able to explain a little bit better. But basically, the trend lines are there for a reason, because as the markets ebb and flow, things tend to get overbought and oversold, and there has to be a way to correct that. So when these bars all went up throughout 2018, this was all red in 2018, and not coincidentally, the price was jutting downwards. But what it did was cause the neutral zone for what a normal NVT is to shift upward. So this green over here, when it started to go back up in April, May, June, July, this would have been in the red if it was over in 2016 and 17, because NVT on average over a long period of time was causing these trend lines to move lower. And I made some really interesting discoveries by setting these colors and seeing what actually was unfolding as I back tested. And my back test results are right here. And I actually wanted to break it down in 3 different ways. I wanted to see what percentage of months Bitcoin's price actually went up based on the scenario of it being bearish, semi-bearish, neutral, semi-bullish, or bullish. Not surprisingly, only 28% of the time when NVT was bearish, price went up. So that means the other 72% of the time, we can expect that when we have red bars like this, Bitcoin is probably going to go down. Right now, our average for November is still in the 9,100 range. Guess what? Now we're close to where we were in October. So I wouldn't be surprised if this bar is actually moving down by the end of the month if NVT continues at its pace. Obviously, we're only halfway through the month right now. Then I look at semi-bullish and bullish months. It almost always goes up. There were 2 exceptions, sort of a small sample size. But this is pretty telling that this has some validation to it, and these trend lines are actually doing their jobs. Even more so when you look at the average returns here. Bearishness, this is on a per month basis. So anytime you're invested in Bitcoin, when it's a red NVT month, you're going down 3% per month on average over the history of 4.5 years since I've been tracking this. On the opposite range, if you look at semi-bullish and bullish, you're going up 22 or 25% per month respectively anytime you're seeing yellow green or full green. That's pretty crazy in my opinion. So I'm excited to release this article next week to fully explain it Hopefully it won't be over people's heads, or I can properly explain it in a way where people can just efficiently look at this chart and say, oh, green is good. That probably means price is going up. Red is bad. Price is probably going down. And yeah, that's pretty much it for now. I just really wanted to show this to you guys and kind of give you a visual of just how telling this chart has been over time, and what Sandsheets can really do for us when we connect our data to it.
Thanks, Brian. Really cool. Can you leave the template on just for a sec?
Of course.
Yeah. So actually, I'm thinking if so, while Jan is on the call, if we can also try to do so. This is basically a back test that which you have performed. I'm thinking if Jan, it's possible to also try and do sort of a front test, or try to kind of use, let's say, the data in advance to see the predictive power of the model as well, similarly to what you've done for the a day of the week strategy, which where basically, you've used historical returns and historical data to plot or predict the price and the strategy moving forward. Do you think that something similar could be done for the NVT as well?
Yeah, absolutely. I think that they actually lend to each other pretty well, and we use a lot of the data here for both. And I already have a lot of similar calculations for percentage changes and stuff that can. It probably wouldn't take much time to have a back test running for this the way Jan did for his day of week study.
Yeah. No, shouldn't be a problem.
Okay, cool. We can
work together on it.
Yeah, we should get on it sometime next week when Jan has some time to just to validify this even further. But in general, I quite like basically the fact that we're in the red now. Essentially, what that's saying is that the amount of value transacted on the Bitcoin network just is too high compared to its price, right?
Yeah, well, even more, a better way of explaining it is the token circulation is not justifying where the market cap is right now. It is too low.
Too low, sorry.
Compared to how high the market cap for Bitcoin still is, meaning that it's overbought at the moment.
Exactly.
It doesn't mean that necessarily is going to plummet, but it means that transactions need to pick up in order to keep the market cap where it is. Otherwise, it's going to start dwindling, or a whale might just plummet the price, and there will be no volume to push it back up because of the lack of transactions.
And can you actually go to Grafana and kind of show us the transaction volume and token circulation trends for Bitcoin over the last 2 or 3 years? Maybe even further.
Check it out. Refresh here. It doesn't seem to want to go. Let's go forward. There we go. All right, one more time. So you wanted to look at the NVT chart itself?
No, just there's a transaction volume / token circulation chart, which is half of the equation for NVT. So I'm just interested in looking at long-term trends for token circulation and transaction volume for Bitcoin.
Let's see. So this is NVT based on token circulation?
Yeah, if you go up, so it should be like the 4th or 5th chart.
Okay.
There it is.
Way up here.
So after tokenage consumed.
Got it. Okay.
Yep, so transaction volume, daily circulation, there you go. So yeah, exactly what we've been talking about, right? So the fact that even at the all-time high, so if you navigate back to your template, yeah, you can see that even around all-time high, there's been a NVT is still in the green, which essentially saying the amount of value transacted on the network compared to its market cap is is good, it's fine. And you can see that the transaction volume at that time correlates to what we're seeing on the NVT graph. But since then, obviously and somewhat expectedly, if we consider Bitcoin shifting more and more towards the sort of store of value, logic and philosophy, we can see that the transaction volume and token circulation has been throttling over time. If you go back to the Grafana chart, especially transaction volume, like token circulation actually remains fairly consistent, whereas transaction volume has dipped significantly since.
Right. It seems to have a lot more volatility to it than token circulation, and it had a peak way up here. This is obviously when the rise was happening, and then it's almost like it sort of acts like volume a little bit. When it runs out of steam, that's when the price sort of starts to switch direction a little bit.
Yep. And just for the for the uninitiated, so transaction volume essentially just shows the complete or total amount of tokens that are included in all transactions on the network on any given date. Whereas token circulation is our attempt to filter out the noise from that metric and try to eliminate possible manipulations on chain. Whereas we only track in token circulation, we only track unique coins or the amount of unique coins that have changed wallets on any given date. So basically, if I send 5 Bitcoin to Brian on a Sunday and then he sends it back to me, those same 5 Bitcoin, and we do that 100 times, that will show up as a spike on the transaction volume graph, but it would not show up as a spike on the daily circulation or token circulation graph because we're discounting the additional transfers of the same coins.
Right.
So yeah,
Well said.
that's the difference between the charts. Okay, very cool. Thanks for sharing, Brian.
Thanks, Dina.
All right, I guess is it time for our esteemed community member, Active Coin?
I have today. I have something to share.
Oh, okay, cool.
I have something, but it will be old-style, hardcore Elliott wave.
Oh, I love it.
Yeah, I didn't share it on time. Okay. Visible?
Yeah, I mean, it's almost as if Daniel is talking anyway because we're looking at Elliott wave. So yeah, good enough.
Yeah. Yeah. The sentiment started with Elliott waves. This is how I got the first reputation and followership. Anyway, we assume this move, the first one, which is not marked here, was the 5 waves, and also because what happens thereafter, that looks very familiar.
Mm-hmm.
I will not say about wave A, it can be anything. It looks like 5, but it doesn't matter much. What matter much is wave B, because we have here quite good 3 up, 3 down, again 3 up, 3 down, and one last 3 up. It looks so much like a triangle, unbelievable. And when you see triangles, then you say, okay, wait, it's Elliott waves can be complicated, but it's all about like probabilities. There is a high probability we made something before, market consolidated and make last final move. And this last final move looks like a also very nice specific structure which fits into how market now behaves. It's a final, I don't know how it's called properly already. It's not leading age, it's like finalizing age, where I see this one, there are 5 waves and then one more 5 waves. Like it's kind of 3, 3, and then the final 3. So what I want to say, if we, because for those who don't know Elliott waves, it might sound confusing. Those who know, they might find it useful as a setup. The top line, resistance line, once we break up above it, that's quite strong confirmation we can go long. Or a final one, if we go somewhere around this area, 800, 2000, 300, somewhere slightly below 61%, and then we go strongly up, it might be also the sign. And the final confirmation, if we do see crowd, because at the bottom there should be some either bad news or some level of panic or dissatisfaction. There should be correlating crowd mood. I'm looking closely to it because I like the structure. It looks quite clean. And I'm missing on the last point, this crowd specific. There is always specific crowd mood. You can see it once you like practicing red waves for 2 or 3 years. You know how it looks like. It's not there yet. So looking for it. And the structure is very more or less similar. If I go to Ethereum, EOS different. But yeah, it looks very interesting for long setup. To combine with it, now go away from Elliott Waves. I did not have time I did have time to ask Jan, but I wanted him to finish as many as possible tests on our fundamental trading model. There is one thing which I think, Dino, you can confirm. There have been in the last 2 or 3 weeks a lot of coins completely uncorrelated to the whole crypto market moves. So
yes, there's been a bunch of breakouts that just don't seem to follow, especially the Chinese coins, but others as well.
Yes, and this is a sign. Once you see the market doesn't move the whole market in one direction, instead the correlation is breaking up, the market might be changing direction. The pure, proper bear market, everything goes down. The pure, proper bull market, almost everything go up. Now, when major coins like Bitcoin or Ethereum or quite some of them going down, but there is enough, and with good, interesting either fundamentals or message to the community going up, well, this is another very strong sign when you would consider, I might be now thinking about how to leverage it once setup is finished. So long story short, the long looks good. You need, depends on your risk parameters. You want more risky, well, you can consider going long like $100 below. You want less risk, wait till this green light is broken on the way up. And if you really want to be elitician, like I like to be, I'm looking for crowd mood which confirms, regardless where the price is. Once I see this mood, yeah, I will go. That's it from my contribution today. First time, long time didn't contribute.
Yeah, thanks for the insight, Max. And I think this is a good segue to Dan, because he's, I mean, as far as Elliott Waves and TA is concerned, I'm sure he's most versed of all people in the call. So Dan, any particular thoughts on Max's kind of Elliott Waves predictions?
Well, I mean, Maxim and I generally seem to have counts that are pretty well in line. The B wave, I have a triangle there as well. It seems all too clear in structure to me. I've had a few debates with some other people in other servers regarding it, because there's some Elliott Wave technicians who like to look for touches on every single count for like the A, B, C, D, E wave, but regardless. It's pretty in line with what I'm looking at too, and I'm kind of in the same boat, looking for the crowd right now. I think this move is finding its end at the moment.
I'm drawing for, if you need to some arguments, it's actually almost perfect here. You see it?
Yeah.
So the triangle, from how I see it, it's like A, B, C, D, and E. It's typical. It's a little bit short of hitting the final. So like I've never seen so good. Well, I've seen a lot. So
yeah, I've gotten some debate lately that the structure's ugly, which I've kind of found ridiculous.
Yeah. Okay, so I remove it because it will become overloaded. But yeah, that was my main reason, because it looked good, and it also I don't know if I still have it. It does represent. Yeah, right. Don't look at this ABC. It's still under consideration. I do. My initial idea is we will make a big leg up and then crash one more last time. But okay, that's pure speculation. Here we did have shortly before again A, B, C, T, E. We might be like just, I don't know, Bitcoin likes triangles or whatever. It's like his favorite structure because the crowd mood is so, I don't know, undecisive. Anyway, seems like, yeah, seems like I'm back into relatively active observing the market because it looks very interesting. Good. I stop.
Okay.
Anyone can take.
Thanks, Max. Okay, Dan, was there anything you wanted to share? Because I mean, I wanted to also go over some of the 90-day active coins that I've been looking at as
Yeah, I
well.
thought I would piggyback on that.
Okay,
So let
cool.
you go first and kind of
All
follow
right.
afterwards if there's a
Let
minute.
me share my screen. One sec. Okay, so let's start with a few coins that I covered previously in my analysis. So if you guys go to insights.sentiment.net while this loads, and you scroll a bit down, you will find an article by Ibis, which is me, why are Link and BAT decoupling from Bitcoin? And in it, I kind of take a tour of some of our on-chain metrics and show some similarities between the two coins every time they're sort of acting as a breakout or an outlier compared to the rest of the market and using Bitcoin as a proxy to the market. So one of the things that Dan and I have been looking at recently is this particular chart or the percentage of active coins for a particular coin that we're looking at over the last 90 days. And kind of then, before I kind of show a bunch of examples, do you want to, because this is still in the realm of theory, right? So last week I was talking about some of the ways that you can use our data to spot tops, and this is one of the possible ways that we're kind of considering a metric that could be good leading indicator for the bottom and a subsequent rally. So then, do you want to just briefly kind of go over, because you kind of posited this theory first, why you think and what you think this chart might mean, and why did 90-day active coins could have such an impact on the price?
Yeah, sure. I mean, to cite again, I had written one insight, I believe, or two.
Yeah, I'll
that
share
kind of touched on it. But by and large, the thing that we continue to talk about has a lot to do with the activity falling off, and that being an indicator of how much is being demanded active-wise by the market at the time. And we've noticed across a number of different tokens and a number of different time frames that this at times leads and at times follows. And that's why we're going to keep this like in theory as it is, because at the moment I'm kind of, to be honest, like completely stuck in a stalemate with some of the thoughts on it. And we can touch on that once once you finish some of this. But it seems that it might be part economic equilibrium where there's two curves where the activity curve falling off could adjust against whether it's a price curve or a circulation curve. I'm not entirely sure. And this forces the market into a new state. And I think that's where it has me kind of stuck at the moment. But as you can see, these large fallouts that has pulled up right there, which show there's less active tokens being demanded by the market, and the price appreciates.
So this is Chainlink, this is Basic Attention Token, this is 0x. All three coins, at the time when Bitcoin was trading sideways, all three coins kind of had their own little breakout rally. And this is the pattern that kind of brought me into this metric, looking at it a bit more carefully over the last few weeks, because I've been seeing this same sort of pattern pop up time and time again. Now, obviously, we need to kind of consider the fact that these dips are clearly, at least partly, just aging out from previous action, right? So especially for Chainlink, these dips here and here are likely kind of a consequence of the increased action during Chainlink's all-time high. But I generally think that a move is a move regardless. So to me, the reason why I wanted to kind of give an additional thoughts on this is because I've also kind of looked at several more coins over the last week. Some of them that have been breaking out and been seeing a fairly similar pattern here as well. Let me show you for Maker. No, not for Maker, maybe for Bitcoin. Let me see.
Can we
Yeah.
also check like 30 days?
We don't have it here. We have it in HODL waves, I think. But yeah, so for Bitcoin, it actually seems to be sort of a similar correlation here as well, right? It's not obviously as clear or as clean as on like basic attention token because there's not as much aging out. But right here, when it dropped below from 17.4% all the way to 15.7%, so losing about 1.5% of active supply, there was a correlating price appreciation for Bitcoin as well. So another kind of, another additional argument to support this theory. And I've been
An inverse of it, real
Sorry?
quick. If you could pull up Ether on the last 6 months too, we can see an inverse on the percent of active coins in the last year.
So this is for the last year. Do you want me to look at the?
Yeah.
Yep.
And give us a 6 month view, please.
Mm-hmm. So it dips here, right?
I'm sorry, I meant Bitcoin, not Ethereum.
Okay, yeah, I was looking at, because I know that you showed me that before and it looked. Yeah, okay.
Yes. So this is what would be the inverse, where the activity has started to ramp up as we've seen the market decline, almost in tandem.
Yeah. So there seems to be some merit to this, like even from just a behavioral standpoint, increased activity and more coins kind of available and more supply flooding the market, having an adverse effect on the price, and vice versa in case of coins kind of being shielded from the market, resulting in the price appreciation for the asset in question. Obviously, at this point, this is anecdotal at best, but I've been looking at more and more coins kind of showcasing and exhibiting these same platforms. So DXChain, I was looking at it recently as well. You can see this huge dip just before the rally. Maker similar, although Maker, it's been going up and down. But so Bitcoin, Chainlink, basic attention token, 0x. So all of the coins that kind of had their rallies recently seem to exhibit this pattern time and time again. So I'll be looking into it a bit more in the future, but just wanted to showcase one of our metrics that seem to have possibly a predictive power in terms of when you might want to enter a coin rather than just spotting tops, which is always better to kind of tackle both sides of the coin.
Can I give you one suggestion, because I need to leave in 2 minutes?
Yes, I think we're almost done anyway, because it's almost an hour.
But yeah, I wanted to say one thing. Maybe the combination of two things, growing price in the falling activity, because it shows from behavior point of view uncommitment or cautious approach of the crowd. You see, price is growing, still they're not on the board, so they feel like cautious, and this is where you want to buy. You consider risk to be limited, but the opportunity is very high. Risk as always, but there is a chance crowd somehow is not buying in.
Yeah, it indicates, well, as far as at least the holders, it indicates a level of confidence in the price action as well, I would say, right?
Lack of confidence. So price is growing. Yes, you need to combine. If you say about all-time holders, you need to see if they're not moving stuff to the exchange. It's one thing. But what I want to say is there is not much yet buying pressure for newcomers. It means they're not convinced. And from contrary point of view, you say, oh, okay, guys, so I want to be first. You will be after me. You know what I mean? So this is like when I'm looking into this now from behavior point of view, that could be interesting stuff indeed. Of course, the risk is still there, so it might be false rally, false breakup.
Yeah.
But if it's not the false one, you are before the crowd. Yeah. So you always want to be before the crowd when it's go up, and actually before the crowd, especially when it goes down. This is especially true.
Right.
Anyway, yeah.
Okay.
You don't need to be the best. You need to be better than 80% of us. That's enough.
Yeah, I mean, as we said, just a theory for now, but something to keep an eye on.
It looks interesting, and it makes sense, because everything I evaluate, my personality should make sense from behavior point of view, and this one does make sense.
Yep.
Okay.
Cool. So
Yeah, there
before
just
we,
seems to be some little bit missing from it, though. We should, just to be clear, that
Yeah.
it's like 66% of a theory.
Yes. Well, it's a fresh theory. That's fine. It's an initial stage.
yeah, there's something here that we're still kind of trying to wrap our heads around, and also it would be good in the future when we have this metric as part of our API. When we add it, it would also be cool to kind of have Jan do some back tests on it and see whether we can actually prove this from a data standpoint as well, rather than just looking at the charts and being like, oh, this is what this means in particular subset of or a particular time range. So yeah, for now, just an anecdotal, but if you guys have any sort of additional ideas as to what this might mean and why this might seem to be a recurring pattern, or additional kind of metrics to combine with this for increased effect, let us know. And then, do you have anything else to add, or should we be wrapping it up?
Just one thing.
Yeah.
I dropped in our chat. If you want to pull up the screenshot that I put there,
Yes.
I'd like to put a little bit of an image in some of your minds, specifically Brian, Jan too. That's YouTube.
Is that YouTube? Oh no, wait, where did you send it? Is it on Discord? Oh, it's on Discord. Okay.
So in regards to the activity monitoring, and as we just said, it seems to be about 66% of a theory. At the moment, trying to kind of look at it from an equilibrium standpoint of supply and demand, instead replacing this with circulation curves, i.e. Hodl waves. I hate that word.
Yeah.
But the period-based ones, as it would pertain to the activity curve, obviously not being equal parts because they're the inverse of each other. But if you're looking at a 90-day activity and a year Hodl wave or 5-year Hodl wave, and seeing how they might interact with each other or against each other as it pertains to price appreciation in this manner. I just wanted to put that image in some of your minds as we talk offline for the next week and kind of knock around the idea, because I do think that there is a missing element to the activity as it applies to price and whether we can possibly find ourselves getting good entries from it.
Yep, and I know that you've been doing some additional analysis to what we've just shown, and have been fishing for feedback as well. So, especially from Jan, if Jan, you have any additional ideas as to how we might test this and make it a stronger theory or a model even, be in touch. And I think,
Yeah.
I think that's it for today, guys. Thank you all very much for participating, and to everyone looking at or watching us live or looking at this after the fact. If you want to be a more active part of these meetings going forward, let us know on Discord, and we'll add a link to the Google Meet room before the call. And if you have anything specific that you've been seeing on our metrics and want to share on these to get feedback from the actual team and the people that develop these metrics to maybe bring some clarity to what you're thinking and add context to it, be sure to let us know. So that's it for today, and I'll see you all in 7 days. Thanks, guys.
Thanks all. Talk soon.
Thank you. Bye.